Hey everybody, this is David Scarica. So this is stock chart of the day, and we did a long one. The ones I did early in the week were kind of long. Usually I try to keep these 5 to 10 minutes. They were like over, I think they're close to 15 minutes. So this one's going to be a little more in depth as well. One of my nights where I can't. I was going to do this Sunday morning before the football games, and then it's around 3, 4 in the morning. We've got a bit of a front coming through here, and it's kind of windy. I got stuff blowing around on my deck. So I was like, you know what? I think I'll do this. And it's a really nice breeze coming through the house. So I'm kind of like, it's great. I'm loving the fact I love this weather. Like, I know California has its faults with politics, but you can see why people live in California because we're having California type weather now where it's late 70s during the day, maybe around 78 to 80, and then low 70s at night with this breeze, like I said. So it's just, in my opinion, kind of like perfect. So, and yeah, we're gonna look at, we talked about the election trades. We saw another update on the market on Friday. One second, I'm gonna log in here to my stock charts account. Yes, remember I talked about the Trump trades. So these trades ended up being even more extreme than I thought. So remember I talked about the green trades. You might want to short them. You thought Trump was going to win, etc. So it does look like this stock might be bottoming here. Look at kind of the all of these tails on on the reverse hammers, you could call them, on this candlestick chart. So, but it was down like 15% when the day after Trump won. Like I thought maybe these solar stocks would follow, or sorry, would fall, I don't know, 3, 4, 5%, but they were down 10 to 15%. Like this is a company I owned for a while, and this is a zinc battery storage deal. So they're what they're doing is they're using zinc batteries instead of lithium, because of course, zinc batteries are less expensive. Zinc is, there's a lot more zinc in the world than there is lithium, less flammable, all this sort of thing. The problem is they don't have as long battery life, and they don't charge as quick. That's the problem. But this company has gotten a bunch of subsidies and government grants and money and that sort of thing. So that's why it fell. But this thing was down. You can see it was just over $3 the day before the election and went as low as 220. So this thing at one point was down nearly 30%. And it just shows you, it was really crazy. Like I didn't expect that. So this is the solar ETF, and you can see that kind of hit a new low here. And again, look at this big gap down around 41, and basically went down almost 10% here, after the election. So really, really incredible stuff right now in what's going on in TAN, and these deals. And then, of course, ALB I talked about, that didn't fall as much. You can see a gap down. It's back out here. Lithium is really beaten up. And look, the thing about the whole thing with energy and batteries and solar and all of these things is, okay, here's the deal, right? And the deal is as follows. We are going to see still a huge demand for these things going forward. A lot of Europe, Canada, these places are still using renewable or so-called renewable energy, EVs, etc. So the United States is definitely going to veer away with that with Trump, but there's still going to be a demand. And look, even in places like China and India, which are really going more to nuclear, we're still going to see, renewables be part of the solution, right? So there's still going to be future demand for it. And like I said, this company is very beaten up. The high was like $300. So that was a little different. Difference between that and First Solar is that First Solar it was near all-time highs just a few months ago. So I think that's obviously why it fell more. And then, we go look at like the pharmaceutical companies. They've kind of rolled over because, I think RFK, I don't think you want to own these. I owned a bit of Pfizer and we got out of it in the service, even though it has a 6% dividend, because I don't think you want to own these, because I really believe RFK is going to go after these companies. And I think somewhat rightfully so, the problems with the COVID vaccines. We all know the issues, with Americans having problems with drugs, illegal and legal. So, you know, GMOs in food, all this stuff. I really agree with RFK and a lot of that stuff. So anyhow, we're going to look at that as well. Um, um, so as well. So these things here are all, have done that. So then on the Trump trade side, look, the oil stocks haven't done huge. They've had a nice little, but you can see it did have a nice bounce here. It was up a few percent. Part of the issue is, oil price has to start moving. we're still at like $70 in West Te Texas. So, you need a combination of the oil price bouncing a bit plus more drilling to really help those as well. But they did see a bit of a pop. The real big pop was, and it was a sector I didn't even talk about, was the banks. You can see this huge move in the banks. The banking index was up over 10%. We're not talking about small companies, right? We're talking Goldman Sachs. We're talking JP Morgan. We're talking Citicorp. We're talking Bank of America, these gigantic companies. And I guess what's happened is this is a regional bank I've watched for years. You can see the same thing gapped up there too. I think the problem with all these things is, or not the problem, but the reason all these things have moved is that they're going to somewhat get rid of a lot of the regulations that were put on in light of 2008. A lot of the capital requirements, etc. Now you can say, oh, it's going to cause another banking crisis, but I think the issue is you need really demand for credit. And again, with like home prices where they are right now, you can see the home and builder index had almost no reaction to the election. Went up the day after, went right back down is basically where it was before. And the issue remains is, with rates moving higher, we'll get the 10-year bond here. You see the rates have after the first move up in the election, we're about where we were before the election, but with rates, having moved significantly higher since September and home prices at near all-time highs, home affordability is at all-time lows. So there's not the demand for credit. So that's why I'm not really worried about them deregulating the banks. Now, maybe the deregulation could be a big problem. Like, I don't remember Barings Bank, the bank that went under, that Nick Leeson story, when he was doing these leverage trades on the Nikkei that blew up the whole bank. So maybe you could have rogue traders blowing up banks like that if there's not capital requirements. But I think that would be difficult to do because you need to really do these things en masse. And these companies right now are much bigger than Bearing banks. Now, you could argue that maybe a lot of these banks need to be broken up, maybe, because they are almost too big. But anyhow, I don't really see it being a problem. I've said over and over again, I really believe the next crisis is this. What we're looking at here is the government bond, government debt crisis. So you've got the mixture of these higher rates, going forward. Because remember, even if they cut rates, they're only going to cut to like, this is the short-term bond, to like 3.5 probably. And now you've got $36 trillion, a lot of that, which was yielding like, say, was issued at 1%. That's going to be issued at, some of it's been issued already at 5%, and probably say 4% on average. We'll just do the quick math of that. Let's say the debt goes to 40, just to make it a nice, easy, long, even number. Well, at 40, at 4%, you're talking 1.6 trillion in interest rates, right? At 2%, or sorry, 5%, you're talking 2 trillion a year in interest. Well, if rates were still 1% at 40 a trillion, that would only be 400 billion in interest. So you're basically talking about, the debt interest payments going up 4 to 5x. And I've talked about this in the past. If you think about that 2 trillion, the government only takes in about 5 trillion in revenues. You're talking 40% of revenues is already going just to pay interest on the debt, right? So, and the whole budget's 7 trillion. So that's, at 2 trillion, you're talking a third of it. I think once you get to that third 40%, that's when you start getting really problems. Now, it hasn't really hit the dollar. You can see the dollar's actually been very strong. There's probably capital movements going into the U.S., seeing that the U.S. is going to be probably, very market friendly in the short term. And, one issue that we have in the Western world and other countries, like I'm from Canada, and we have, Canada's the worst prime minister of all time right now, especially if you're a pro-market person. And then of course Europe is seen as more socialistic as well. The UK, which was always probably maybe you could say the most capitalist friendly country in Europe. I'm talking outside of Switzerland and that sort of thing. But it's got a Labor government right now. So, that's pushing people into the dollar. And another issue too is because these economies are not growing as fast as the U.S., partly because the U.S. has the largest deficit right now in the OECD. The U.S. is running a primary budget deficit of nearly 6% of GDP. So, of course, that helps economic growth. But because they're not growing as fast, too, a lot of these countries are cutting rates. And then countries like Canada and Australia, private debt and housing debt is just long. So another guy asked me, I saw talk for uranium and tech and all these things. Look, with all due respect, you want to ask a question, you want me to do charts, you got to become a paying member. I can't do everything, but I'll look at uranium. I think you can see uranium stocks have had this nice move here. Uranium itself actually is breaking down to almost a yearly low. the way I see all these kind of things, and same as silver, so sorry, same as wind and well, I'll show you the quickly. I'll show you yeah, you can see same thing. The wind ETF tanked. Um, so the way I view all these things, though, is quite simply that they're all an offshoot of oil. Oil and natural gas are still our major sources of energy for cars, for electricity, etc. So if they move higher, then all these other alternatives become more attractive. So obviously, there's also there is a nice long-term demand play with uranium. But look, the problem with uranium, quite simply, is look at this is CCG. Cameco is the big boy in the uranium sector. It's not cheap. Like if I showed you a really long-term chart of Cameco, let's go back 20 years, you're going to see that Cameco, this was the time to be buying Cameco between 2017 and 2020. And by the way, this is when I talk about maximum pessimism. See, Cameco peaked at near 50 back here in 2006, 2007, went all the way to 5 during the financial crisis. But if you had started buying here, you had to wait 1, 2, 3, almost 4 years for it to break out. But it was worth it because let's say you could have bought it like seven, eight, $9, or even 10, right? And then you're up 5, 6 times. Anyone's going to take a 5 or 6 times return in 6, 7 years, especially on a big, large cap stock. But you had to wait. So that's the one issue. And that's why I've talked about over and over again why I've changed the concept of my newsletter, which I'll talk about in a second, by the way. Because when you're writing a newsletter and people want stock picks all the time and whatever, if I tell them, hey, like right now I'm buying a 3D printing stock, and I tell them, hey, look, here's the deal. You're gonna have to wait 5 years for this thing to pay off. No one's gonna want to give you a monthly subscription. So like obviously I'm still selling subscriptions, but now I'm doing this in a different way where it's not like people, I'm charging less, and so people aren't just like, oh, I need a stock pick to go up like next month kind of thing. Like if you want that, the service is not for you. So anyhow, I just wanted to show you that. And to be honest, if I look at the chart here, go look at what Cameco did here. This kind of looks similar to me. I think you want to wait for these uranium stocks to pull back. Like, let's go to the URA. Let's put that back up. Yeah, you can see again the URA. The time to buy these uranium stocks was here. Maybe they can see a short-term top here and get back down to 15 or something. That'd be a 50% decline. But I think that's, for those of you who are interested in that. And then actually another trade that was interesting that I didn't talk about last time was, and I was in them for a bit last year, but I got out luckily, was the marijuana stocks. And I think they're in trouble because with all Republican Congress and Senate, marijuana is not being legalized anytime soon. So you saw this big move up here on the news that the Department of Justice is going to like decriminalize marijuana. And then, there was hopes that, again, if at least the Democrats got to take two of the three segments of the government, you could see this move. Because I'm sure, let's say for argument's sake, the Democrats did get Congress, which they didn't, and the presidency, and say, like, I don't know, like it was 52-48 in the Senate. I would think like three Republicans or two Republicans, and then the vice president would have been the deciding vote, would have come over to maybe legalize marijuana. Because say me some Republicans, say you got a Republican senator who's in a more Democratic state, or say a Republican senator is just more into the center on this issue. That could happen, but that's not going to happen right now. So these companies are basically done stuck at selling at the state level, or they're done, or they're stuck, selling in Europe, selling in Canada, which does not have, these companies have proved they can't really make money in the Canadian only market. So that was another, I guess you could say, election trade that really tanked. I'm not going to talk about gold and silver here. Obviously, they had a whack and then they bounced, and they're kind of, I think they're going to base for a bit because I still think there's going to be this idea that there's going to be this big boom in the economy, and that might hold them back in the short term. And, gold and silver, I think, are something that I should really focus on their own as well. So, anyhow, there we go. I just wanted to review some of these election trades. Like I said, some of them had bigger moves than I thought. The banks, were something that I didn't even really think about. Because who really thinks, even if you're going to deregulate, that these huge, gigantic banks are going to have 10, 15% moves in a day, and that sort of thing. So, and I'm going to take a look at this. This is another, yeah, you can see this. Yeah, you can see CGC is getting back to where it was here. So what's funny is I never really bought back in to these because I just figured you would have to see real signs of U.S. Deregulation and U.S. legalization. You're not going to see that. So anyhow, I guess that's it for today. I hope you enjoyed this. I'm going to put this out Sunday morning, like I said. So there is an early morning game. It's a pretty bad game. I think the Giants are playing somebody in the London game, but I'm sure most of you don't watch that anyhow. So yeah, let's give you something hopefully to watch Sunday morning, and everybody take care.